Okay, all right. So that's the update on the F&O space. Thanks, Mangalam, for that. We have Sacchitanand Uttekar joining in from Tradebulls to tell us what he's strategizing today. Sacchitanand, welcome to the show. Well, it's definitely a very lively market and lot of sectors to choose from in terms of, what one wants to probably look at. But what would your approach be? Would you look at the frontliners, which is the Nifty, or would you look at the mid-caps, which are bouncing back?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, I think the Nifty is in strong hands now. If you look at the overall setup, we have the Nifty Bank and Nifty IT both contributing from the front. So far, yesterday we saw the Nifty reconquering the support at around 24,840, which is its 20-day exponential moving average support. And today it is challenging, for a close above its 5-day exponential moving average, which is placed somewhere close to around 25,030. So we are seeing some phases or final phases of consolidation before this particular trend breaks out on the higher side. We are optimistic and we are believing that the 24,800 support may not be breached, and we may see the Nifty again scaling back towards that 25,300, 350 kind of a zone. So we are optimistic when it comes to Nifty, especially when we have both the Nifty IT and Nifty Bank again leading from the front. When it comes to Nifty Bank, yesterday we saw a very strong piercing line formation on the daily chart. The range at around 51,000 on the lower side was defended well. Even in today's trading session, we are seeing a very strong hold of this particular support at 51,000. And on the higher side, the headroom remains open right up to 51,800 for this particular week. So I think the major contribution has already been started from Nifty Bank yesterday, and we see that this particular flow continues, and that's why we believe that the equation is right to deploy some aggressive long positions in both the indices, keeping a flow somewhere close to around 51,120 on a closing basis. There are good opportunities presented by Nifty Bank for a positional target of around 51,840.
Okay, and specific stocks?
Well, on the stocks front, I think Infosys from the Nifty IT pack is showing very strong signs of short covering rally. The stock has already started displaying a very strong pullback on its 60-minute scale. We have its RSI now trending above 50. And the way the data is shaped up, we yesterday saw again the level of around 1900 getting defended well. So this is where we believe that the momentum that has been seen in today's session may continue towards 1965. Eventually, we see Infosys scaling towards that 2000 mark, and that's why we are recommending building long positions here in Infosys futures, keeping a stop loss at 1910 on a closing basis. The immediate target is placed at around 1965, but eventually we see it scaling towards 2000. The second stock on our radar has been IndusInd Bank. Now, the stock has already displayed a strong recovery last few weeks. If you look at the overall structure, the structure on the weekly chart has been improving. There's a declining wedge formation which has matured. The stock is again scaling towards its 200-day exponential moving average. We are expecting that there could be a strong breakout in this particular counter again, which may lead the stock towards 1530 eventually. And that's why we are recommending building long positions in IndusInd Bank futures as well, keeping a stop loss at 1410.
All right, take that point, Sachi. Thank you so much for joining in. And as you speak, the ticker team tells us that a bunch of these Adani Group stocks are seeing sharp spikes in